Hello again. Welcome back. Welcome back. I apologize if you hear a couple dogs barking in the background. I've got a debacle happening as we speak, but I hope you're all doing well and welcome to this special event where we're going to run you through our best seasonal patterns for August. We're going to teach you a little bit about what seasonality is and how to use it to better your results in your trading. Now, John, I'm going to start us off with a very, very simple term. And I'm assuming everyone at home's probably heard or seen this before. So make sure you're giving us a wave. Let us know you're here. Have you ever heard the term, John, sell in May and go away?
I have heard that term. I've heard that term used quite often.
I'm assuming most people probably have. That, in fact, is a seasonal pattern. And today we're going to run you through what these seasonal patterns mean and how you can benefit from them. I'm going to, unfortunately, just throw John on the spot because I'm not kidding. I have a lost dog has just entered my premises. And I'm a little unsure on what to do. So I'm going to throw it over to John, sort this situation out in 5 minutes, then come back in and tell you some of the best seasonal patterns I have. John, I apologize for putting you on the spot here. I'm going to be 2 seconds.
Absolutely no worries, Jordon. You carry on, mate. You carry on. So, yeah, like Jord said, you got a little bit of a situation going on at the moment. So I'm going to take you through some of my top seasonal plays for August. And let me know in the chat, have you heard of seasonality before? Have you ever used seasonality in your trading? I'd really like to sort of get your understanding of what seasonality is as well. Me and Jordon use seasonality a lot when it comes to our analysis, and it's really something that I've implemented into my trading routine on a sort of weekly, monthly, even sometimes a daily process. I'll always come in and check on the seasonal planners just to see where the market is shaping up, what kind of seasonal plays that we can expect. And I think seasonality is a relatively unheard of tool within the market. It was definitely something that I stumbled upon sort of a little bit later in my trading career rather than when I first started. I think when you first start to trade, it's all about the technical analysis, right? And I think the reason behind that is because pretty easy to pick up, right? It's one of those things where there's lots of different ways to analyze a market, but there is typically a certain way that we structure ourselves when it comes to technical analysis. You learn your support and your resistance, your candlesticks and all that kind of good stuff. And then your kind of fundamental and your sentiment sort of data and analytics come into it a little bit later down the line because there's that sort of initial sort of learning curve when it comes to technicals. But I think the seasonal reports are very underrated when it comes to trading. And I'm going to show you one a little bit later that's had a 100% win ratio. And I know 100% win ratios are pretty unheard of in the markets, but that's something I'm going to take you through a little bit later in the show. And when Jord comes back, we're going to go through a little bit more information on exactly what seasonality is and some plays that we've seen play out at the moment, some plays that are active right now this month. But I can see some chats coming up through here. Andrew, I tried to backtest some seasonality and I found that New Zealand US dollar around the last week of the year tends to go bullish. Yep, brilliant seasonal analysis there. Barry, the Santa rally, selling May, Indian wedding season for gold. Actually, Indian wedding season for gold is something that I've only just heard of recently. I didn't realize that would have such a large impact on the price of gold. Indian wedding season as well as Diwali as well is something that is taken into consideration, a lot of selling of gold around that time of year. But that's something that I've only really just kind of come upon when it comes to gold. So that was new information to me. You know, as a trader, you learn something new every day, I guess. But we've got we're back. We've sorted the problem. We're back.
We've put band-aids on the problem. But we're back. We're back. All right. Awesome. It's awesome. No longer my problem. Let's say that.
Okay, awesome. I was just going through. There's some seasonal players that we've heard of before, and Barry actually brought to the attention the Indian wedding season for gold, which I said is something we only stumbled upon. Sort of, was it yesterday? I guess, or was it this morning? It was yesterday, I think. So that was news to me. But the Santa rally is also a big one. We usually see US stock markets performing pretty well in that sort of November, December period because everyone's buying sort of Christmas presents and whatnot. That's why it's called the Santa rally. But yeah, I'll pass it over to you, Jord.
Yeah. I apologize for the disruption. We've been building up to this for so long, and of course, this is going to happen as soon as we go live. But no, I've been really excited, and to kind of share a little bit about seasonality. I'm sure you've already touched on what it is. I wanted to just kind of formally run you through. And I know what you're thinking. You're seeing this, you're like, oh boy, it's another webinar. I'm going to break it up a little bit. And the way I'm going to break it up a little bit is, yes, we're going to dive into what seasonality is. Yes, I'm going to teach you a couple of things. But the first thing I'm going to do is show you how it works. Okay. And I'm going to show you a real world example that happened in February this year. Okay. So we're looking at US dollar, Japanese yen. From the year 2000 all the way through to the year 2023, which was last year, US dollar Japanese yen has increased in value from January 12th to February 22nd. Okay, about a month's difference there. Okay. In this time, it's increased in value 78.26% of the time, which means in the last 23 years, it's only lost 5 times. The other 18 times it's gained in value with an average gain of 1.02%. Now, I know that doesn't sound overly sexy, 1%. Why would I wait a month to make 1%? But remember, we're trading FX here. That 1% in the US dollar Japanese yen pair, for example, is close to, I think, around 160 pips, 170 pips, okay? This is a seasonal pattern. Just like that. We know that from January 12th, to February 22nd, over the past 23 years, 78% of the time it's gained in value with an average of 1%. That is a foundation on a trade idea moving into 2024, which has already happened. So if I go ahead and show you 2024 on the chart here on US dollar Japanese yen, I've got a red line on the left, 15th of Jan, red line on the right, 22nd of Feb. The price in between, 3.88% gain. And that would be if you just purely traded the seasonals, which I don't recommend doing, but the foundation of the idea, purely trading a seasonal pattern, 3.88% gain. Now, once again, I know that percent, make that in a month, make that in a trade. What's 3%? Why would I wait a month for 3%? That's 560 pips in one trade, not having to do much. Just reading a seasonal pattern. I wanted to show you exactly what seasonality could do on an actionable bias before I run you through what it is, right? I want to get your attention. I want to show you the importance of understanding seasonality and how it can build an edge in your trading system. So let's jump in to the 3 things of seasonality: what it is, why it is, and how do we use it. Okay, so number 1, seasonality in trading refers to predictable and recurring patterns in the financial markets that recur at certain times of the year, okay? Seasonality can be seen in various assets like stocks. They actually originate in commodities, but you can also be seen in currencies, in specifics, those kind of commodity-based currencies. The best way I explain kind of how seasonality works is, well, if you're growing apples or growing wheat, there's going to be a time of the year, and every year it's going to be the same time of the year that you harvest and sell. That there is going to obviously increase the supply in the market because you've harvested all your wheat and sold. And if you're doing it in the same country, your seasons are the same. So when it comes down to whatever harvesting season is, everyone's harvesting at the same time. The demand and supply parabolic is going to change. And that's kind of a seasonal play right there. Seasonality occurs due to a combination of factors: weather changes, economic cycles, holiday seasons, sell in May and go away, corporate earnings. Earnings season tends to have seasonal plays. When you're looking at what Nvidia's done recently, what Apple's done recently, for example, retail stocks, they might perform well during holiday season. Why? Because we have daylight savings. We extend the trading hours in daylight hours so you can get out and spend more money. There's a good chance you're going to see something like services PMI increase through summer because people are spending more, increased consumer spending. While agricultural commodities, like I just said with wheat, they may fluctuate based on planting and harvesting seasons. Okay. You know what it is. We got through the boring. I'm proud. Everyone do a pat on the back. You made it. I'm proud of you, right? Let's get into the nitty gritty. Why do we care? How do we use it? Well, by analyzing historical data points, like we just did with the US dollar, Japanese yen there, we as traders can anticipate, right? And it's very the next word is potential, and that's very important. This is going to happen. We can anticipate potential price moves that align with our strategy. It is not the reason for our strategy. It is not what we're betting on, but it is a foundation of a trade idea for a direction. So for instance, a trader might choose to buy a stock that typically rises in December or sell a commodity that usually drops in price after a harvesting season. You come to the charts with that idea. You get your macro to line up. You get your technicals to line up. You, my friend, have a great trade idea. You don't blindly buy and sell seasonals. I think that should that should be on warning sign. Okay, but today we are going to share with you our best seasonal patterns, what we like the most heading into August. And the beauty is we stream every morning at 8:30 a.m. British Standard Time here on Morning Briefing. And we're going to be doing the same the whole way through August. So these seasonal patterns aren't something we're just kind of dropping and never talk about again. These are something that John and I are going to be watching over the whole next month, streaming and talking about. So we can actually share with you whether or not we still think they're valid, whether we're executing on them, or whether we're just straight up ignoring them. You're going to know. So the beauty is we get to go through all of this together. We start the month right, we'll end the month right, having a look at seasonals. There's your quick run through on what a seasonal play is, what seasonality is, and how to use it.
Yeah, I love that. And I think one thing that is underrated when it comes to being a trader, right? I think what retail traders do the most is they wake up every morning, they open the chart and they just look at the chart. They look at what price action is doing in front of them. And I think one thing that really took me from being just that break even, slightly losing trader to actually breaking through and being profitable is being more prepared, right? Yeah. It's just having more preparation, having more data in front of me to be able to make better decisions when I'm not in a trade, but when I'm in a trade, right? And I think that's what's super important when it comes to whenever we talk about topics like seasonality, topics that we're going to talk about in the future as well. It's all about how to be better prepared going into the markets. You know, this is a very serious industry, very, very serious industry. And it's one of those industries that you can get in very quickly. You can get out very quickly.
The barrier to entry is poor.
Yeah. Barrier of entry is very low to get into this, but it's a very serious game. There are billions, trillions going through the markets on a daily basis, on a weekly basis. So it's very serious. So the best thing you can do is give yourself as much info as possible and give yourself as much preparation as you can going into it. And seasonality is one of those tools that can really help us achieve this and help us do this.
Yeah, it is. So let's get into it. How do we do it? Do we sit there and look over the past 20 years and try and find a pattern? Well, we live in a modern era. So we'll call it a modern era. I'm going to call it a lazy era, where everyone does the hard work for us. And there's a few tools you can use to really track seasonality. Now, the beautiful thing in this is both John and I use seasonality before we knew each other. We both use seasonality. We both use different tools to analyze seasonality. And we both look for different things in the way that we analyze seasonality. So I thought that was really, really powerful. And that's kind of why we wanted to do this webinar together to kind of show you. So what I'm going to do straight out the gates is show you a bad version of a seasonality tool. Okay. And that's TradingViews. TradingViews seasonality tool is going to show you this chart along the bottom, which will show you the net return per month over however many years you put in. For example, we're looking at US dollar, Japanese yen right now. You can see the return per month, and it will tell you the average return per month and whether or not it was a good to buy in April or bad to buy in April, for example. This technically will show you some seasonal patterns. However, you can't really change the dates. You can't see everything in a nice liquid Notion. And it's literally from the 1st to the 31st or whatever the end of the month will be. That's just not great information. We don't want only 2 data points. We can essentially just look at a monthly bar chart and get the same information. So it's not overly pretty. So we like to go a little bit more advanced, a little bit more complex. And the one I like to use is an app called Season Axe. Now, it must be noted, we have no affiliation with either of these platforms that we're going to share. We are sharing you just purely because we use them and we like them. So we're not recommending you to go over there and use the product. We're not getting any bounce back if you do. This is purely our opinion on this product, and we feel it helps us. So we feel comfortable showing you guys. This is Season Axe. It's a very, very simple seasonality analyzer, shall we say. And what I've done is pull in a load of seasonal plays through August as promised that I want to show everyone at home. So I'm going to get us started if you're ready, John.
Yeah, absolutely. I'm looking forward to this.
I'm going straight over to you. I'm going straight over to the pound US dollar, which has just changed my tab, but it's not taking me with me. So give me a second. Pound US dollar. Okay. What I'm looking for here on this chart, as you can see, is a nice down move predominantly through the whole of August. Okay. This is showing that it's got about a 70% hit rate. This says 29.17. You might think, Jordan, that does not say 70. We just flip it because we're looking on the short side. Okay. And when the average return says -1%, that does not mean we're losing money. It means the asset loses 1% on average. So these are the two things I'm looking at. Okay. The winning rate, how often it does, and the average return. Those are the two main things I'm looking at, okay? And what I'll do is I'll scroll down and I have a look at the pattern returns over the years, and I'll try and find them nice and grouped, okay? So this is the first pattern I wanted to show, pound US dollar. Why did I want to show weakness in pound US dollar over August? We actually hinted it in our morning briefing show today. The Bank of England is expected to cut interest rates. We do think that is going to happen. We do predict on a macro basis that the pound can find a little bit of weakness in the near future. So when I'm seeing the seasonal foundational pattern there and a macro bias line up, that gives me enough confidence to head to the technicals. Now, this pattern does not start till the 3rd of August. It is currently the 1st. The 3rd is Monday. So I won't be looking to do anything until we get in and around that 3rd. Okay. I'm not going to sell on the 3rd because I need technicals to line up. And that's very important. This is the foundation of an idea, not the idea. What we're looking for is an average return of -1%, but I think we can go a little bit more creative. And what I mean by that is those averages include all of this profit times together, work out the average. Well, sort out the average. The maximum drop, however, is how far we actually move to the downside within this date range, which is the 3rd of August to the 26th of August. And as you can see, especially in recent times, even though we've closed a little bit less, 1.55, and even in here, 1.16, that's where we've closed on the month. We did get a lot lower, 2.38 here, 2.11 here, 3.26. The last 2 months, we've closed at the lows. Okay, so this is really important to note because I care about recentness. I care about whether or not this pattern is playing out in recent times. But this is telling me we can get in and around that 1, maybe 1.5% in a comfortable manner and not have to risk overly ridiculous stop loss values and where we want to push it. If we have a look at the max rise, that's going to show you max drawdown. If you're a trader and you look at your analytics, you're going to see what your max drawdown is. Well, that's what you're looking at right here in this max rise. So this is going to tell me over the past 24 years, or 23, because it's August, over the past 23 years, what was my maximum drawdown for this pattern? This is going to tell me. So I know in and around where my stop needs to be, or whether I've pulled it too short or whether I've put it too wide, because I've got the data here. And as you can see, if you eyeball it, we sit around probably the low 1.2%, where I'd comfortably be sitting for a drawdown. So I don't want my stop there because I think we can get to those 1.2%. If we're going anything over a 2%, eyeballing here, we have never had a rise over 2% and closed a trade in profits. Ever. So I know if we've gone all the way out to 2% on a climb, there's a good chance that's not coming down, and that's where I should be out of this position. So what am I saying? Let's jump over to the charts. We found a short idea an overall play in which we want to be a part of on the Great British Pound. I'll wait for my chart to load for you. Here we go. We want to get a short somewhere in the Great British Pound. This red box that you can see, I'm going to get rid of the horrible seasonal play. This red box is the dates of this pattern that I've just shown you. Now you can see today has been a pretty weak day for the pound. I don't want to be shorting here. There is a trend line here. On the break of this trend line, that could be very interesting to short. What we're looking for is an average drop of about 1.5%. Okay, overall it's 1, but those maximum drops we got down to 2.3. If we can get maybe a break of this trend line, a pull back in, and we can look for a 2% drop or around a 1.5% drop, that's about 200 pips. So what I'm actively looking for now, my macro lines up, my seasonal lines up. I just need my technicals to line up. I'm going to look for a little bit of break of a trend line, a pullback in and around this area, give me a fair price, and I'm aiming to get a 1.5% drop within a matter of days. If we can get anywhere near a 2% drop, I am cutting and running. I'm happy. If we get anywhere near a 2% climb, I'm cutting. I'm unhappy. But that is a trade plan, and that is a trade idea for August, starting from August 3rd, collapsing on August 26th.
Yeah, I really like this play. Like we said in morning briefing for the past few days, there's an idea anyway that we're expecting a little bit of pound weakness coming into the market, and it actually flows really nicely into a seasonal play that I'm looking at the moment on Euro Pound. So if I just bring mine in, this was a seasonal play that I've been looking at, and I've been looking at this for a little while now. Now, the way I do seasonal analysis is slightly different to the way Jordon does it. I look at sort of how the current year is tracking with the overall years, and what I try and typically look for is a strong correlation. Right now, on Euro Pound right now, over all years, we've not really got a very strong correlation. However, we are coming into an election year. We are in an election year, and election years can change the way seasonal patterns play out. And this is why I'm using a different tool called Markets Made Clear. And on this, we can see that in an election year, we have a 64% correlation with what's going on between the price in the current year and what's happened over the election years over a period of time. So what I'm looking at is, are we going to see a seasonal pattern that plays out very similar to this? Now, it's quite nice that Jordon has gone through the pound, because if I'm expecting Euro Pound upside, well, I'm expecting the Euro to outperform the Great British Pound, essentially. And with Jordon saying that pound has a good potential to fall through August to the end of September, or towards the start of September, then there is a good opportunity potentially for me to look at a seasonal play on Euro Pound, right? Now you can see here, there's this little blue box that highlights, and if I just click on this little blue box, it will come up and give me a little bit of a sort of a flash of what's going on within the market. Now, this pattern has a 70% win rate in the market, so very high, and that's something I like to look at as well. I like to look at a high win rate. Now, essentially, what I do with this information here is we have a little look at it and we say, okay, well, there's a good opportunity that we start to see a bottom around about August, and we see that play. And on this particular chart set here, it's saying that we could run all the way up to October. And again, we have to take that with a little bit of okay, there's a possibility that that could happen, right?
Yeah, that is an average.
That is an average, yeah. And we need to be a lot more sensible with that kind of outcome of what we could achieve with that. But what I'm going to be looking for is a potential long opportunity that forms on Euro Pound. And if I just bring in Euro Pound at the moment, this is a daily chart, very similar to your kind of opportunity as well, Jordon. You've got that nice trend line that you've spotted. This is a trend line that I've also spotted on Euro Pound. Now, if I look at the sort of weekly chart, and I just bring in a little bit of a higher time frame perspective, you may be thinking, well, this is looking a little bit fragile here, right? The market is in a downward trend, and you might be focusing on this kind of move that we've had since November and this sort of downward move. However, we have come into a really nice area of support. If we look left back over here, around about August 2022, okay, so we're going back to August again. Saw this really nice rally, and that was the 1st of August in 2022. And look at the move, rallied all the way to the end of September there. So we can see what happened in 2022. Very, very strong move to the upside. Could we see a similar move like that? I don't want to say yes, but there are possibilities of that potentially happening within the market, right? If we look at the previous sort of August, we had a little bit more of a sort of choppy August, but it did climb all the way until the end of October last year as well. So we are seeing this as a relatively strong pattern within the market. So two options for me, really. I'm looking for a break of this trend line, number one. And what I'd be looking for essentially is when we do break or if we do break, if we do break and we hold above this trend line, maybe consolidate a little bit, I'll be happy to look for long opportunities on this market. We can go and try and target previous swing highs on this, and maybe even go and target up all the way up towards that zero spot, 86.20. But again, all seasonality really is doing for us is spotting a potential opportunity for us that we can go and take and have a look at a deeper level on. We can go and then look at the macro behind it. We can go and have a look at the commitment of traders, for instance. We can go and have a little look at other things like technicals that allow us to form the bias. We don't just look at the seasonal and go, yeah, this is something I'm going to go and take on a long position. I mean, I wouldn't, but it's not something I've tested either to say if I just do that, it's going to achieve X, Y, and Z. So for me, I would rather add those layers in to give me like I said, to make me more prepared within the market for a potential opportunity. So euro pound for me is something I'm going to keep on my watch list as an opportunity going forward for a potential trade idea.
Yeah, there's plenty of ways to use that as well. You can look at seasonality as a risk management tool, right? If you're looking at a swing trade based on purely your technical setup and you're a technical trader, you might be backing against a pattern that has played out year after year over the past 25 years. It's important you're aware of that. It's important that you know that you are trying to go against 25 years of pattern when you are trading it. So it doesn't necessarily have to be a tool you use to generate trade ideas like we do. It can actually be used as a risk management tool, or at least as an awareness tool, kind of like how a lot of people treat a calendar, right? With a Forex calendar, for example, an economic calendar. A lot of people won't care about the data. We do. We use it to generate trade ideas, but a lot of day traders and stuff will just read that to know not to be in that market at that time. Seasonality can also be one of those tools that you just use and be like, hang on a minute, I probably shouldn't be backing against that. But yeah, that setup is very similar to what I'm looking at. It actually coincides really nicely with the pound there. And I think majority of that move is probably back in the pound. Now, the ECB is a little bit, what are we doing there? So I think there's a little bit more risk on there, but pound weakness, I'm pretty firm or happy to back, should I say. So overall, I like the idea.
Yeah, and there's a couple of ways that you can obviously expose yourself to this. Obviously, you could go directly to pound futures if you really want to, and expose yourself in the futures market. You go to maybe pound US dollar as an opportunity on that, like you've shown as well, Jord. But like I said, we can add layers to this, right? We can add strength and weakness into this and things like that. You know, we've talked a lot about pound CAD recently as being one of those potential ideas that we've got for a short, because we're expecting some Canadian dollar strength within the markets. You could go and like I've done, find a seasonal play on a cross pair that is expecting some other kind of moves. Like, you know, we've talked about the Swiss franc strength in the market. Maybe you want to go over to pound Swissy. You know, there's all different types of ways you can do this, but it's just good to identify. You know, George's identified essentially the futures, pound futures, and we've now come up with an idea on an FX cross pair.
Yeah, absolutely. If you guys have any questions about our trade ideas or about what we're doing here, please feel free to use the chat. It's the reason we do these things live, so you can let us know how we're getting on. If you're following, give us a thumbs up. If you have any questions, please do. I'm going to move to another trade idea, which I'm gonna put it as a little bit more risky. And the reason I'm going to put it as more risky is because it's the Aussie dollar. You've already seen these very large sell-offs, and this seasonal pattern is for selling the Aussie dollar. I like seasonal plays on the Australian dollar, on the Canadian dollar, on the Kiwi as well. They're a little bit more commodity based, these currencies, with what they produce and how they produce them. So I do think seasonality has a bigger play. New Zealand, for example, massive dairy farmers. Massive dairy farmers. Here in Australia, we produce a lot of minerals. We need to sell those minerals. Guess what? We sell those minerals at a certain time of the year, believe it or not. And when we do sell those minerals, what do we sell it in? Australian dollars. So what do we force every other country in the world to do? Buy Australian dollars. This is a seasonal pattern you want to be a part of. However, what I'm going through today, obviously, is a downside seasonal pattern on the Aussie dollar. So it's a little bit riskier because we have already seen some downfall, and it's not something I'm blindly going to be shorting, but I want to push the button anyway. This has an 80% hit rate over the past 15 years. I usually like to see my seasonal patterns win in or around 15 to 24 years. That's the barrier where I'm looking, with a bigger, let's say, weighted average towards more recent years. I want to see how it's performed in the more recent years rather than back in 2001. Not too worried. What it's done in 2022, 2023, and in and around those areas, that's what I care about. Aussie dollar, US dollar has seasonally seen a downfall through August. I've pinpointed the dates from the 8th to the 24th, so a little bit shorter of a time frame from my last one, but not too much shorter. As I said, it's got an 80% hit rate. So it's a 20% winning trades, 80% losing trades. We are looking to short here with an average return of 0.92%, okay, which not as strong as what we've seen on the other pairs. However, I'm really liking the way this pattern returns is standing up here, to see these constant reds and the grouping not be too far, but then also the building in the recent years and where we're pushing out there. Really like to see. Another reason I've noted this is because you can see the max rise, which is our drawdown in these trades. 2020 all the way through to 2022, we saw incredible rises during this pattern. That's not what you want to see. Why would you want to see it go into drawdown? But here's the thing. We still closed down 1.3%, down 1.07%, down 0.14%, even though we rose so much. So what this is telling me is there might be an opportunity to wait, to see this pattern head up, even in these dates, see if we can get a 1% climb, and then to short it. And that's kind of what I'm thinking here. Now, I want to think that way anyway, because when you have a look at the Aussie dollar, why on earth would you short at these levels? That's a scary thought. What I'm looking for, this blue line, is when this pattern activates. What I want to see is this for a little bit. Okay. When in and around, I'm going to take a wild swing and say the 15th of August. Don't know why that date. I'm just putting the middle of this trade. Around the 15th of August, if we can see a bit of a climb, okay, now we're looking for a 1 to 2% climb, which is 67 pips. If we can see a bit of a climb, test an area like this, I think there's going to be a great opportunity to try and bring this lower. That is not a signal. That is not a recommendation. That is nothing but my brain relapsing on what I would like to see in the event. I've got the seasonal pattern. We have the sellers. Hello, Durfred. There's the sellers. If we just can see a little bit of a pullback, which when we look at the history over the past 15 years, and importantly, over the past 4 years, it's happened 3 out of 4 times. And these pullbacks are quite large. If we can get one of these pullbacks, which I'm expecting anyway, given the recent price action, we can get in and around a topping formation. Let's get a double top. Let's look for a retest. Let's look for some kind of technical pattern which signals a downturn move after we get a bit of a bullish push on the Aussie dollar in between the dates of August 8th and August 24th, and shoot for the moon. We're trying to get about a 0.8% drop, which equals to around 50 pips. I'm looking for 50 to 60 pips on this move as an average. We have gone a lot further before, but I'm not sitting here hoping for the best move ever. I'm just sitting here hoping to hit averages, because averages make money. What do you think?
No, I like this play as well. I like this play. Like you said, we've seen a lot of Aussie dollar selling anyway at the moment, which is kind of helpful in a way when you're looking at a seasonal play, because you're looking at, okay, is the market in the same sort of bias as what the seasonal is telling us? And it is right now. I like the idea of obviously waiting for a pullback, because the market is going to be, in one of those areas now where we're like, do we really want to sell this right now? I don't think so. So looking at the idea that this, when it pulls back, it can pull back quite aggressively, which is nice. If we want to get short this, then there's a good opportunity to do so on a pullback. Yeah, I think this is a nice idea as well. I think this is a good one.
Yeah, to add some macro bias on there is more pressure for the RBA not to hike interest rates. It's been priced in for a long time that they are going to. What you're kind of seeing here is a little unravel on that trade, plus a weakness in the commodity assets. So you are starting to see that shake a little bit. The RBA is going, okay, should we actually hike? That's being priced in. That's going to cause a little bit of weakness in the Aussie dollar, as everything recently has been pricing in that they are going to hike, and you're going to get that interest rate differential. That carry trade is going to be a little bit more attractive, or at least pull that in, so it's not going to be as expensive to long. If you're seeing that unravel, that's going to add that macro bias. Keep in mind, when I've done that analysis, I am looking for a reason to be short. That is not me being neutral, saying where's the Aussie dollar situated. That is me actively looking for a reason to short it. So I am going to be biased with that analysis. Realistically, do I think the RBA still hike? I do. So on a macro point, I'm sitting pretty neutral. But if I wanted to find a reason to short, it is there. So I've got the seasonal play. If the technical lines up and data sticks at where we are or gets worse, when I say worse, I mean unemployment up or CPI down. Okay. If that data changes, I think this is going to be a really, really profitable August move.
Yeah, no, I like the idea. And actually, again, flows really nicely into a seasonal play that I've picked out as well.
We're doing seasonal plays, so that we're going to sit around on the same table.
Yeah, this is teeing me up quite nicely. So this is a play that we've actually spoken about in the morning brief show, and we talked about it last week. We executed on it, and it worked out really, really nicely. So this isn't just a seasonal play that is like, oh yeah, we think this could do. This is something we actually executed on, and it was an Aussie CAD short idea that we spoke about in the morning brief show last week. Now, through August to September, we can see that we actually have a really decent sort of short side move that forms on the Australian dollar versus the Canadian dollar here. Now, like George said, we have seen a little bit of an early sell-off in the Australian dollar. So the seasonal play might not go as far as what we are potentially anticipating. But I still feel like there's some decent downside to this, right? So 85% win rate on this particular move. And I've got a seasonal play that usually starts on August 8th all the way through to August 23rd. And that's what I'm going to be looking at in this potential opportunity. But the one that we were looking for, and another way I like to look at seasonals, is where are sort of the peaks in the market? Where are the lows in the market, right? Now, a lot of the times seasonals can play out the best in certain periods. So like here, where I'm talking about on that August move, right? The move's already kind of happening right now in terms of what's going on. Now, I know you kind of look at the specific day to kind of potentially trade. I like to give mine a little bit of a buffer. I like to give it sort of a 5, max 10-day sort of buffer just to see what's going on either side. So 10 days before the alert essentially comes in on a seasonality, I'll have a little look at price action, see what's happening, see what's going on, see if there's any kind of idea around what's going on. And that's exactly why I looked at this position that I'm going to take you through in a moment. But an 85% win rate on this potential move coming for Aussie CAD to the downside. Now, what's quite interesting, obviously, you've talked and mentioned about the RBA and the potential for the RBA to hike interest rates. Now, we do have an RBA meeting coming up next week. So is it going to be that meeting, or is it going to be the meeting after where we're going to get that potential hike? I think, again, it's going to be down to what we're seeing in the markets in terms of, like you said, your inflation rates, your employment rates and things like that. So it'd be interesting to see if the RBA pulls the trigger next week rather than waiting for the next meeting. But what I find interesting about this as well is look at that low that we're coming into in October. Now, this is something that we can probably talk about a little bit closer to the time. But what I'm noticing in a lot of these Aussie charts right now is there's a potential low that's coming in October. So I'm looking for the short side for now, like you are. But I'll be very aware coming into the end of September that there could be a big turnaround on the Australian dollar, essentially.
And just as a point of note, we start entering our summer months. Our tourism goes through the roof. The rest of majority of the rest of the world go into winter. They go into hibernation. The spending drops. Holiday season opens up here in Australia. Daylight savings hits the East Coast. So we do start seeing the reason you're kind of seeing a big seasonal shift there is because our borders open up and it's like, hey, it's summer over here. Get over here. And the money shows where the money flows.
Yeah, no, absolutely. It's almost like with the pound, some of the best performing months in the pound are sort of April, May, June, July. And the reason being is because the nights are getting lighter. You can actually go out in the UK. Whereas when it gets dark at 4 p.m., you're like, oh, that, so we don't really go out as much, essentially. Or if we do, it's to drink our sorrows away. But essentially, yeah, the seasons play a massive part in the seasonal pattern. And this is something that I really like the look of here. And just to say, like, we actioned on this, we really did. This was something that we talked about in morning briefing. I liked the idea of getting short on Aussie CADs, and I managed to do that on Tuesday, the 30th of July. We looked at this potential pullback into this really nice resistance zone, and I was looking for a move down into the next area structure of highs, essentially, because what I'm looking at is, are we in that sort of conditions where we're in that seasonal pattern? And yeah, we are. The market is breaking through lows, it's making lower highs, essentially, and that's what I'm kind of looking for. So I managed to get an opportunity on the 30-minute chart, which was one of those beautiful trades which has zero drawdown, which was absolutely fantastic. And we had this really nice double top coming into the resistance zone. We had a very strong engulfing bearish candlestick that formed, so I ended up taking a short here. But that was then compounded by the Australian dollar data and the China data that we had out earlier in the week, where we had CPI coming in a little bit lower. We had core CPI coming in lower, and we also had China data, which was okay, just wasn't really showing too much in the way of growth, which really compounded those moves in here. So I like the idea of remaining bearish on the Australian dollar in the near term, especially in this kind of August period. And I'm looking for similar sort of patterns here now. Obviously, I've put a little bit of a marker here on the date, which is the 8th of August, is when we typically see a little bit of a downward move. But we are in those bearish conditions right now. So I wouldn't mind seeing a little pullback, maybe back into this area where we had a consolidation before the breakout. For me, that's an area I've always looked at as areas of interest, because consolidation can be areas where large volumes can build up. So I'm looking for the market to kind of come back and retest those areas and give me another opportunity potentially for the downside move. Now, there's two ways you can kind of look at seasonality, I feel. You can kind of trade it in terms of a long-term view. You could go, okay, well, we're typically bearish from August 8th to the 25th of August. I can potentially look at a swing trade. So if the market pulls back, I can get short, try and hold that short as long as the conditions remain the same until that point. Or you can try and trade it on more of a day trading move, right? Because when you get, let's say, a higher time frame area of resistance coming in and price comes into it, you can say to yourself, well, I want to be short this asset. Maybe I can go and trade it. So that was a 2R move there. What if there was 3 or 4 opportunities for the rest of the month that were both, or all of them were creating 2R opportunities, right? You are multiple is something that as traders we can decide. And I know, George, you talk about, the 1% isn't sexy, right? It's like, oh, right, 1% it's not sexy, But when you look at it in terms of how you can trade it and gain from it yourself, and to me, a big part of my trading is identifying trend, identifying a strong currency against a weak currency. Why? Because that's what moves a market. That's where you get these big moves. So that's the moves that I want to try and get on the back of. And again, seasonality really plays its hand into that. So I like Aussie CAD short. I would like this area of resistance up towards that 0.9, 0.70 kind of area, a little bit higher. Obviously, if conditions change, right, and this is very important, if conditions change in terms of the sort of higher time frame downward trend for me, then I will step away. I won't really look at this in too much detail.
They're not married.
No. If we breach back into these highs and the market kind of creates a new high and things like that, I'll just be a little bit patient with that. I'll say to myself, okay, well, there is technically a seasonal play that could happen between this period. I'll wait for the conditions to come back into my favor and then try and execute on it.
Yeah, and I think it's important to know if you guys want, go back to Monday this week, and you'll see John go through that trade, but he goes through it with a massive gleaming smile because he just took profit. So, he's told you, hey, we took this position. This was the setup. The seasonal was there. The macro was there. The technical shown, he pulled the trigger. He really did. Go back to Monday's stream. You're just going to see a child at Christmas. He's like, I woke up with profits this morning. $Aussie CAD. So you can verify that over there. It's the beauty of streaming every day. I've got one last one I want to share. A little bit spicy. And
I like spicy.
You like spicy. It's at the end of the month. End of August. Okay. I know some of these trade ideas to get through August. End of August. You see the win rate. 93.33% over 15 years. Just for reference, that's 14 gains, 1 loss in the past 15 years. Very nice. This is CAD Swiss franc, and this kind of joins your Aussie CAD bias there that we're looking for Canadian strength. And this happens towards the end of August, right the way through to the beginning of September, right? We're looking at the 25th of August to the 6th of September, what I've moved out here. I'm going to give you guys a pointer. Okay. And this pointer is very important. You have a look at this pattern returns. It looks beautiful. Okay. Recentness, not looking too great, still printing positive, but not overly positive. There's one standout year, 2011. By far, stand out. Like it's like a sore thumb, right? It really, really stands out. I like to get rid of them. I don't like these standard. They mix the data too much. Obviously, something has happened that year in that month, and I think the data is going to be consumed. So I go ahead and simply get rid of those standout years. I don't want them.
This is a really nice feature. Sorry, George, step in. This is a really nice feature of this tool. I don't have access to necessarily that with the tool that I use. So this is actually a really nice feature, I feel.
Yeah, I like to get rid of that year. So I've gone ahead and done that there. As you can see, the data looks a little bit better. It's grouped in a little bit nicer. Average return coming in at 1%. Win rate still at 92%. That's 13 wins, 1 loss. And overall, we're seeing some decent strength. Now, 1 year that we lost and we never went into profits. It just straight run down. Just didn't even hesitate. It was just hey, 2018? Nah, we're not doing that. Every other year, you can see that it was actually really, really positive. The drawdowns are very limited. Other than 2018, very, very limited, sitting in around 0.5%. The max rises go anywhere from 4.9% all the way down to 0.44%. So this is a very lucrative seasonal pattern. Now, this isn't to the end of August. This is going to be a little wait. Right, 25th of August is when this starts actioning. So it's going to be a little bit of a wait. We've got plenty of time to kind of read the Canadian dollar situation. We know it's losing a lot of value because of it being a commodity currency, and those are just getting absolutely stumped at the moment. And we're seeing a shift of money. 25th of August is 25 days away. That's plenty of time for everyone to relax. Have a think about this. The Swiss franc's got a lot going on. CPI coming in low. Is it going to cut rates? Maybe. There's a lot going on. 25 days is plenty of time for us to sit back and have a think about this. But this seasonal pattern is a strong one. Once again, a 92.86% hit rate over the past 15 years, excluding 2011. If you want to include 2011, it just bumps it up to a 93.3. But once again, that's a standout year, good or bad. I don't like including the standout years. This is a very, very, very promising seasonal pattern. If I can get the technicals and the macro to line up, I can tell you now I'd be back in this.
Yeah, I like that. I like when you have a very high win ratio because it just gives you a lot more backing that this could potentially play out. And I like the idea of buying CAD. Again, if you join us on Morning Briefing, we talk about this a hell of a lot at the moment, and we're just waiting for those setups to really play out. And then, if they do, then great, fantastic. But this is again another layer that you can add and say, look at that, 92% win ratio. That is an
It's an
incredible
edge.
thing. It's an
It's
edge,
an
yeah,
edge.
absolutely. And I think that's what I love about this, right? I absolutely love about this. Again, is this the sexy thing that you want to see in trading? No, we're not showing you Lamborghinis. We're not showing you Range Rovers flying around the screen. We're not showing you, technical methods that are going to, X, Y, and Z, because unfortunately, that's not the reality, right? That's not the reality that we live by when it comes to this. People that have longevity in the industry are not people that do those things, put it that way. Me and Jordon have met a lot of these people, right?
From both. We've met people who have longevity, and we've met people who have Lamborghinis.
Yeah, exactly. I mean, and I know some people would be like, but I want the Lambo, right? But don't get me wrong, these other people, they have the Lambos. they just don't show them. But no, essentially, this is what I love about trading. And, I guess I'm a nerd when it comes to this kind of stuff, because I love trying to go into the data and the analytics of things. And I think this pattern's a really good pattern to have a look into at the moment. We're seeing a lot of Swiss franc strength coming into the market at the moment because of that risk off, risk on situation. Markets shifting away from those commodity currencies, going into safe havens. But that turn's going to happen at some point, and this is one I'd be watching quite closely as well. I quite like this one a lot.
Yeah, and just to add to that data, if you want to be able to capitalize on a little bit more, like I discussed in the Aussie dollar one, the last 3 years we've had a drawdown of about 0.5%. Then we've gone long and closed at the points. As you can see, the maximum rise was 0.61. We closed this pattern at 0.61. The maximum rise in 2022 was 0.44. We closed at 0.44. The maximum rise in 2023, 0.49. We closed at 0.46. This is telling us that the end of the pattern is the most profitable in the last 3 years. And we have had a 0.5% drawdown. So this does mean as the pattern starts playing out, if you can get a pullback, you can get that drawdown and you can get a better entry point because your technicals line up and your macro line up. And this is why it's just not blindly buy and sell on the 5th of August all the way to the 6th of September. We don't do that because that's not an edge. That's just silly. We compile it with what we know. We compile it with your other edges just to enhance your edge and enhance your profitability. And that's a good little tool to know there, that it is probable that we're going to have 0.5% drop before we move in this pattern. If you can get a pullback on the technicals into an area, you can nail that entry point, you can maximize your results from this.
Yeah, that's well said. That's well said. I think as well, one point that I wanted to kind of just jump on a little bit was the point you made of seeing that little 0.5% move first before seeing that. Information like that can just, again, better prepare you going forward, And imagine, right, you're CAD Swiss short right now, and you're loving life because the market's moving to the downside, and you think it's just going to compound. You're just going to follow the technical trend of the move, and you're just going to keep adding risk because it's going down. But you don't know that there's a 92% win rate probability that the market's just going to turn and go in the other direction. That's something that you can avoid, right? That is something you can avoid when looking at this kind of information, which I think is great. I just wanted to bring up David's comment as well. I love that notepad in most of this. Just everybody in the background, just writing.
You're speaking my language. My desk is covered in notepads all the time, David. It's the only way you learn. The only way you do. Notepad it. If you've got questions, throw them. Don't be embarrassed. I know for a lot of people, this is going to be the first time you've been exposed to seasonality. It's, as you say, very niche. It's not something the general retail audience utilize. No. I think it's an incredible tool. It's something I absolutely love. It's something that I know for you guys that have been at TradeDelicious for a little while. Don Dawson, 35 years he's been trading. Seasonality. It's the backbone to everything that he does. Isn't the reason he buys and sells? No. Technicals are the reason he buys and sells. But who gives him the trade idea? Who gives him the foundation? Seasonality. I think it's something that is an incredible tool that can help you be calmer, be smarter, be more intelligent, get more information, and be able to just risk appropriately. As you said, whether it be warning you on what position to not be in or giving you the idea of a trade. This has incredible stature. So ask your questions. I know for a lot of you that might have been the first time, ask stupid questions. We are very, very open community here. We are willing to answer any questions that you send your way. If there's something you don't quite understand, ask us. It's the reason we do this live. That's the last trade idea I had. John, I don't know if you want to throw another one in there, but that's the one that starts on the 25th of August and 6th of September, and it's CAD Swiss franc bullish.
Yeah, I like it. And one thing I just want to, again, just kind of point out what you said there, Jord. Not a lot of retail traders do this.
No.
And that's the difference, right? So there's that saying in the markets where 90% of retail traders fail. Why? In my opinion, it's because they're very unprepared. Very, very unprepared. They think they can just open the MT5 on their chart, press buy and sell, and it's going to work. And for a very, very small majority, it will. A very, very small majority. It's like athletes in the Olympics, they're gold medal athletes.
Yeah.
They're a very, very small.
Naturals.
Yeah. Very small majority, right? So I would just say if you want longevity in this is the type of data that's going to separate you from them, right? It's going to separate you from being. It's going to bring you into the 10% rather than keep you in the 90%. It's by being better prepared, having more information to be able to take the next step, get to the next level. And I think that's something that's I like to point out as well. I hear, and again, the retail traders might not want to hear this. They don't want to hear that it's going to be difficult. They don't want to hear that you're going to have to do some work and get some information, unfortunately, but that's what you want to do. That is definitely
this tool was created for Bloomberg platform, which most retail traders never make it to. That's $2,000 a month just to be on that platform, and then it's more to access this tool on top of that. It was also built for Reuters as well, institutional level clientele. That's who's been using this, and it was demanded by them. They wanted it. Caesar Nax were able to convert that into a retail spot. So as markets made clear, they're able to convert that information into a retail audience. It's out there. It's for everyone to get. Is it sexy? No. Is it incredible? Absolutely. Has it made me a lot of money? Oh, boy. Oh, boy. Incredible. It just, the levels to this is just different. But as you say, this chart right here, we look like nerds. And John, we are nerds. We are nerds. Right?
I love being a nerd.
I was in a public office today. Someone was talking about CPI on another table. My ears went up and I was like, I'm in. Where are we chatting? What do we get me a drink? We're chatting CPI, right? But this is what it's all about. So feel free, take notes, ask questions, everything you need, because this is what TradeDelicious is about. Leveling up your trading, okay? Leveling up what you're doing so we can help you bridge that gap between the retail and the institutional. We're not going to do it in a sexy manner. Sorry, because it's not sexy. But we are going to bring you actionable insights and real results.
Yeah, love it, love it. I might leave the seasonals to the chat now. Right? I'm going to try something. I'm going to get chat involved a little bit, see if anybody wants to give a bit of back and forth. I can see there's a few people in here that are doing that. Imran Khan, for one, just talking about saving the video and David and whatnot. So we can either talk about Japanese yen. I'm going to give you two options. Japanese yen, which is mine and George's favorite. Or we can talk about the 100% win rate one that I've found. And it's a UK stock. Okay, it's a UK stock. So I'm going to give you the choice. Do you want to go over the Japanese yen, or do you want to go over a UK stock that has a win rate of 100%, but only over 7 years?
Yeah, that's like the quick disclaimer at the end. Terms and conditions apply.
Yeah, exactly. So I'm going to give you guys the choice. Let me know. Get in the chat box. Also, like George said, if you have any questions whatsoever and you want to just ask us something, please feel free to just drop that in. But yeah, there are many seasonals that are out there at the moment that you can take a look at. But again, I love this stuff because I am a little bit of a nerd. I look at commitment of trader reports. I want to know what the non-commercials, the hedge funds, things like that. I want to know what they're doing. And the beauty is they have to declare what they're doing, right? They can't just, they're not like me and you where we can just
Nancy Pelosi.
Exactly right. So you can just Nancy Pelosi.
That's a delay.
It was, but like that. That got me. It's just I thought of the trade tracker that somebody did then in my head. So, buying video. So basically, yeah, that really threw me, Jordan.
Sorry.
No, you're good. You're good. But no, that's in all seriousness, no, that people have created a tracker from that because they have to declare what they're doing, right? And that's also information that retail traders, they ignore it. Why? Because one reason is they don't understand what they're looking at, right? And that's what we're here trying to do. We're trying to help you understand that side of the information. Whereas you've got, oh yeah, Louis wants the stock. I know. If Andrew was still in here, he had to go earlier. But if Andrew was still in here as well, he would want to see the stock. So yeah, I'll go and talk about the stock in a second. But that's what we're trying to do here at TradeDelicious. We're trying to up your understanding of what's going on. Two, it is a little bit difficult to understand at first. So it's two, you might look at it and you might be very daunted about what you're looking at, because it all looks very professional, right? It looks very professional. So you might be thinking, I don't want to get this wrong, or I don't know what I'm looking at. So yeah, let's go talk about that stock though. I'm going to bring on the stock. Let's do it. Right. So looking at JD, right? JD Sports Fashion. Do you remember JD, George?
Yes, JD Sports. I think
in Australia.
I'm gonna say I think landed in Australia a few years back.
Oh, okay, fair enough.
I believe JD Sports is now in Australia.
Yeah, so JD Sports, to be fair, really reinvented themselves a while ago, right? JD Sports would just be the place that you go and get your tracksuits or your football boots, right? Your shin pads, or for me, or you'd go and get like just your PE kits and all that kind of stuff, right? But then they really reinvented themselves over the year, and they really pushed into the youth, right? They pushed into young generation growing up. Say again.
They're like sneakers. They're big in the sneaker game, right?
Now they are. Now they're massive in it. So they really took the helm with that. And obviously we know the big sort of sneaker boom that's happened over the past 5 years. I mean, you've got StockX now and things like that, where you can buy and sell sneakers that are rare, and they're bringing out rare. Goes over my head.
Yeah, Pokemon cards.
Yeah, Pokemon cards, right? I wish I kept them. And my Yu-Gi-Oh!
I know. I had so much.
Yeah, exactly. So anyway, yeah, JD really reinvented themselves, went into that, and this is a stock pattern that, yes, we only have 7 years of data, right? So we have to take it with a little bit of a pinch of salt, right? But in the last 7 years, the average return on this move is 259%, which is yeah, the average return is 259%.
Sorry?
That sounds balmy, right? Annualized return, that is right.
Oh, so, yeah, okay.
Yeah. So,
annualized return.
Yeah, not the move.
No.
There's a high win rate on this still, 100%. So we've had 7 years of a high win rate on this. Now, this is what I'm looking for. Now, this occurs on August 26th to September the 10th. And what I've noticed actually on the chart, I'm just going to bring the chart up. Now, this is where TradingView kind of has a good little thing that you can look at the bottom, if it will come up on the screen. Well, it came up last time. It's not coming up at the moment. But basically, what you can see is like when the earnings come out and things like that for the different types for the stocks that come up, and there's a little thing at the bottom. I don't know whether it's because I've got some type of setting off at the moment. Maybe it's events. Hang on, here we go. Dividend split, earnings. And things like that. Okay. So they have these little earnings periods that come out, and you can see what happens is typically when we get one of the earnings, we see a rally before the earnings. This is what this seasonal players at the moment. So before the earnings come out on JD Sports, you get a rally in price, which is quite interesting to me. And again, that is a a seasonal pattern that could occur, right? You're looking at it going, okay, well, they bring out earnings at that time of year. There could be a decent little rally that happens. So you can see at the moment, we've got this consolidation. If I flip back over to Markets Made Clear, we're in that consolidation period at the moment. And typically we see that jump all the way from August 26th up to September the 11th. And that could be a little seasonal play for you there. That's a little bit different to your currencies and things like that. Just a little bit more. This is more of a sexier play, no? You're going to come back at me.
You've got 7 years. I've got 25 years of data.
Don't back me down on this, Jord. I've said 100% win ratio.
You've got 7 years of data at 100%. I've got 25 years of data.
Okay.
And this pattern has an 84% hit rate. It's only lost 4 times in the past 25 years.
Wow, that arguably is better than mine.
That is much better. I'd take this 10 times over 100% in 7 years for 84% in 25 years. Once again, I outlined how important recentness is to me.
Yeah.
Look at this. Look at this, which is obviously where you're seeing your pattern there. Your average return does pull in. In the last 7 years, it sits at around 11 to 12%. You can probably still aim for that as an average. Over all these years, it sits at 6%. That's still whopping. I mean, you're looking at the 23rd to the 12th, 2.5 trading weeks to get a 6% return on this equity. Pre-season run-up, I love it. I love it. I saw when it's the moment you said I've only got 7 years. I was like,
I don't like it.
I'm gonna go check it out. I'm gonna go check it out. I pulled it up. I got 25 years of data. Yeah, pre-earnings run up, annualized return 191%. Only lost 4 times. Maximum loss 13 is pretty bad, but max profit 27%. And when was that? 27% run up. Whoa, that was all the way back in 1999. Okay, so in recent times in 2019 and 2020, we've seen max rises around 18 to 19%. 2022, we saw 13%. 23, we saw 9%. Importantly, 2018, 19, 20, 21, and 2023, 0 drawdown on this pattern.
I love this. I love this a lot. I
It's
love
a
it
nice
a lot. Now that you've expanded the years out to get more data in, again, that's what we like, more data. That actually looks very good now. Very, very good. And like, I'm not traditionally a stock trader, right? So, you know, a lot of you in the chat might be just FX traders and whatnot, and you're thinking, well, I don't trade stocks, you know, I'm going to walk away from this. But the beauty of platforms these days is they give you a whole heap of things to go and have a little look at. Brokers these days have expanded their products. So you might be trading FX on a brokerage, right? But if you could go into the CFD panel and have a little look at what's going on, you could go, okay, do I have a little London Stock Exchange market watch area that I can go and have a look at? You can even go into the search box on your MetaTrader panel and type in JD Sports, see if that comes up. But wouldn't it be great, right, that you could just say, right, at this time of the year, there's a pattern that works a percentage of the time. I'm going to go and trade that pattern if it occurs, if we get the price action to trade that. I think that is an unbelievable stat to have, and an unbelievable little.
If you can nail technical analysis and you've got someone else giving you an inclination on which way price is going to go, makes your job easier.
Exactly. And I just think this is what retail traders don't do. They don't do this. No. They really don't.
Welcome to the minds of Jordon and John. Right? If you did enjoy this, I know it's a little long. I know it's a little heavy. I know it's not sexy, but this is why we did it. Because we really, once again, we are not associated with either of these platforms. We literally just sit here just showing it off because we generally believe in what it is, and we generally believe it can help you guys. We're going to leave it there. If you want to see more from us, if you want to get daily updates on these seasonal patterns, morning briefing every day, 8:30 a.m. British Standard Time. And of course, join us on YouTube, join us on our website, TradeDelicious.com. Reach out to us on Twitter. Our handles are down here. You can see both our handles, John. I've actually thoroughly enjoyed this. I really enjoy looking through these seasonal plays. So I appreciate your time, and it's been a pleasure.
No, as always, should.
Cheers.